Guys, good to see you. Welcome back to another Dividend Happy Hour. I think it's been a couple weeks now. I think we just took last week off. But as always, I'm so stoked to be back with you for another live stream. I hope everyone had a great week. Pretty interesting week on the market. I don't know about you guys, but over these last couple of days, as the market has kind of zigged, my portfolio has kind of zagged, and we're actually sitting at all-time highs. I'm going to show you what's been happening in the portfolio in just a moment. We'll jump over and take a look at the spreadsheet. I actually have two kind of cool things to show you in the portfolio, so I'm excited to get into that. But once again, I hope everyone had a great week. I don't know what else I can say. I'm really excited to be back live streaming. It's been so hard, guys. I'm not going to turn this into a rant, I promise, but I feel like it's been so hard to stay on a consistent live streaming schedule. It'll be good for a couple weeks. I'll have to take a week or a couple weeks off, and that's just life. Like, it's just kind of life getting in the way, and it happens sometimes. But I sincerely love doing this, and I feel like I say this whenever I come back after a couple weeks or a week off. I feel like I say, okay. I always say this. We're going to be good. I can't see anything that's going to get in the way for a while, and something always comes up, but that's just how it goes. We make do. How do we want to do this? Do I want to show you guys what's happening in the portfolio real quick? No, I don't think so. I think before we get to that, we got to kick this thing off the best way we know how. Guys, grab whatever it is you're sipping on. I actually got something a little bit fun tonight. I got I'll just spoil it right now. This is a Founders. The brewery is called Founders. Founders Dirty. I don't want to say the word. It's a bad word. Dirty B word. It is a what kind of, I think it's like an ale of some sort. Like a dark ale. Yeah, dark ruby in color. It's very good. Really like this. I've been finding this at I got this at Total Wine yesterday, but they also have it at Whole Foods here in Vegas. It's usually pretty affordable, good beer. And sometimes a nice cold beer just sounds good. But anyway, grab whatever it is you're sipping on. Sorry. Cheers, got with me tonight and tuning into another Dividend Happy Hour. This is episode 155. We'd be much farther along if I didn't take so many breaks in between weeks. But thank you guys so much for tuning in with me tonight. I'm excited for another fun live stream. And also, here's to the dividends. Here's to the pursuit of that sweet, sweet cash flow, because really at the end of the day, that is what's bringing us together. But nonetheless, cheers. Here's to you guys. Let's have a fun stream. So let me know a few things here. Let me know a few things here in the live chat. And I want to go through and say some just kind of shout you guys out in a minute too, see who all we got in the building. There's 102 of us right now, which is crazy. And by the way, let me just pause and say, if you haven't done so already, please do me a favor and hit the thumbs up button on this live stream one time. It really does make a difference in getting this live stream pushed out to more viewers while we are live. So if you could do me that small favor, I would be forever indebted to you. That's what I'm trying to say. But anyway, let me know a few things here in the chat. Number one, I want to know, which stocks did you buy this week? What did you add to your portfolio? There are a lot of stocks out there ripe for the picking. So let me know what you've been picking up. Number two, I want to know whatever it is you're sipping on. What did you bring to drink to the Dividend Happy Hour? Just once again, for those of you just now popping in, I got myself a little brewski tonight. So let me know whatever it is you're sipping on. At number three, did anything cool happen in your guys' portfolio this week? Excuse me, maybe some of you guys hit some new all-time highs. Maybe you hit a new dividend income record. Maybe you hit that 100th share of SCHD. Sorry, guys. Whatever, any milestones, anything cool that happened to you guys this week, share that in the chat as well. We want to share in your accomplishments, share in those small victories with you. And also, number four, I really, really want to know if we have any first-timers here in the Dividend Happy Hour. In case this is your first time tuning into this live stream, just so you know, we typically, I know I kind of said some stuff earlier, kind of saying otherwise, but on a normal week, we do this live stream every Friday night, starting like right now, starting at 5 p.m. Pacific time, 8 p.m. Eastern time. On a normal week, if nothing gets in the way, we'll be here live streaming every Friday night. And as you can tell, there's pretty much no plan. There's no agenda. It's exactly what it sounds like. This is just a happy hour amongst some amigos getting together to talk stocks, and it's always a lot of fun. It's always one of the highlights of my week. So I hope you enjoy this stream, and I hope you come back for the next one and all the ones after that. But let me go through here in the chat and see where can we start here. So let me go up to where can we go? Where can we go? Oh, I see my brother Holton in here. What's up, Holton? He's working. Nice. I'm excited to see you in here. Okay, so Chris says he's having a rock star. Looks like Anders is having some eggnog. Very nice. I don't know anyone that drinks eggnog anymore. I've never personally been a big fan of it. It's always been weird to me, but more for you. Who else we got? Ooh, Joss is drinking a Modelo. Very good. Oh, and I know I got to show you guys the portfolio. We'll jump over there in a minute. Let's see. What else we got? Ooh, David picked up some Zoetis. Great price at $115.60. Yes, the decline continues, man. For Zoetis, it just can't you break. It really just can't. Let's see. What else we got? Holton's drinking some Super Bio Freak. What a scary choice at 5 p.m. on a Friday night. Holton's probably going to get off work and go to the gym, if I had to guess. Are you in Sac, Holton, or are you in Yuba City? Let's see. Fast Eddie eating Chewies leftover. Nice. Okay. Oh, look at this, guys. Matt Livingston account hit $30,000 today. Congratulations. Really cool milestone. Also picked up some Amazon. We got Korean Cardboard in the building, drinking a latte. There you go. There you go. Also picked up some Realty Income at Main Street and SPYI. I think I know 2 out of those 3 are monthly payers. I don't know about SPYI, but I think they're probably also a monthly payer. Nathan started a position in Procter & Gamble this week. Okay, well, I hope it ends up being a good one for you. I wouldn't just buy it because you see me buy it. I actually did buy some Procter & Gamble this week myself, but I hope it ends up being a good position for you. It's been going through a tough time this year, that's for sure. Okay, let's keep going. There we go. We've got hit 5K on my ETF portfolio with VOO and QQQM. Nice. Very, very nice. Yeah, Chris with quite the shopping spree. VOO, CDNS, Google, Visa, Meta, Vici, and NVIDIA. Nice. There you go. Ooh, Craig wants to know, how much are you getting in dividends from SCHD on Monday? We'll take a look at that. I'll save this one. We'll take a look at the expected payment coming on Snowball Analytics in just a moment. Let's see. Yeah, look at this. Anders maxed out 401k, $800 into Realty Income, $400 into Mid-America Apartments, getting close to 2K in dividends. Nice. There you go. Let's see. Mike started a new position in Home Depot. Good stuff. Yeah, can we take a look at Home Depot? Sure. We'll add that one. Okay, what else? Oh, yeah, Lucas, you can do it, man. Couple more weeks, 7.5 shares. You got that. Yeah, man, picked up some Vici properties at $27.74. Nice. Very nice. Yeah, Striper, we'll definitely take a look at Home Depot. We can look at Lowe's as well, just for the heck of it. And I'm going to, let's see. Let's see here. Yeah. Apocalypse, quite the shopping spree there as well. Look at all those stocks, guys. Yeah, Tie Guy, a little Woodford Reserve. Nice. I think that's owned by Brown Forman, right? Ticker symbol BF.B. There you go, Mike. Went over $4,100 in annual dividends. Good stuff. Ooh, Mr. Broadcom in the building. There you go. Peptides are flying off the shelf. Nice. Caesar this week picked up usual SCHD, SCHG, VOO, added more to Costco, Vici, and Zoetis. Nice. Good buys. Good buys. There we go. Mr. J Ortiz with some hot chocolate. Good stuff. K Nazario made it to 225K. Nice. Dirty. Okay, I'm 15 at 13K invested. In 3 years, I'm investing in the Marine Corps. Should I buy dividend or value stocks? only have 4K in dividend stocks. Okay, we'll come back to this one. I'll have it saved. We'll come back to it. I need to reread that question one more time. Okay, I see a question from Dr. Tax PR about his portfolio. We'll look at that. I have that saved. There you go. Rami, 22 years old, almost 50K invested. Goal is to hit 100K by May when I graduate. Man, good luck. That's quite a lofty goal. You can do it though. Good stuff. Good stuff. Quentin, good pickups. McDonald's, SCHD, Procter and Gamble. Ooh, yeah. Sports Edit for Life. Good question on the Kenvue and Warner Brothers news. The not related, two separate mergers. Yeah, this is a good question. This is a very quick one to answer. A lot of hype around MasterCard. I know you're big into Visa. Any chance you'd also pick up MasterCard? No. Well, never say never, but I don't feel the need to pick up MasterCard since I already own Visa and since it's such a large position for me. Let's see. Yeah, at what point does a dividend yield become suspiciously high? Yeah, we'll come back to that one. Current thoughts on Home Depot. Is something going on with Home Depot? This is like the third or fourth question about it. So Dalton, someone already asked us to go through Home Depot, so we'll take a look at that. I mean, they reported their earnings. Oh no, they reported earnings last month. So I don't know. Yeah, we'll take a look at Home Depot. Okay, guys. So I've got 7 questions saved. And okay, I have 7 questions saved. I want to show you what's going on in the portfolio. Before we get into these questions, we'll take a look. So jumping over here, let me add this to the screen. Jumping over here to my dividend portfolio tracking spreadsheet. As you guys know, you can grab this for free. There is a link to download the spreadsheet in the description of the video. 2 things that I want to show you on this spreadsheet, and then we'll go look at my SCHD payment coming Monday. So first things first, the portfolio right now is sitting at an, the portfolio right now is sitting at an all-time high. This is the first time I've ever seen it over $119,000. And earlier today, it was up even more. I think the highest that I'd seen it before the market closed was like 119.6. So we were within $400 of hitting $120,000 in this portfolio. And I actually want to ask you guys this too. I put up a, RHI. You know, David, real quick, sorry. Getting sidetracked. David, over on my channel, I did a full-length video specifically covering RHI. So if I was you, if you wanted to know about Robert Half, go check out that video. It's from just, I don't know, sometime last month. Did not do very well. It only has like 3,000 views, but it's a pretty long video. It's all related to Robert Half. Definitely check that out. I'd rather you go watch that versus covering it again here in the stream if you don't mind. Like I said, everything you'd want to know, everything that I have to say on Robert Half is in that video. Okay, so what was I saying? Something about this right here. Oh yeah, so okay. This is the fun of the live stream. You get sidetracked. So I put up this poll on Instagram earlier asking, oops, goodness gracious. I put up this poll earlier on Instagram asking if, everyone thought we could hit over 120K by the end of December. We've got, what is it, 19 days left, almost 18 days left. What do you guys think? Let me know in the chat. By end of year, what are your predictions? Do you think do you think January 1st, 2026, this portfolio will be over 120K? Now, give it to me straight. Don't sugarcoat it for me. And I know it's impossible to predict the future, but gut instinct, what do you think? And no pressure, but I could use some good mojo from you guys. So let me know in the chat real quick. Yeah, I'm seeing some chatter about Clear Secure. Yeah, I'll show you what Clear did today in the portfolio real quick. Okay, so this was number 1. Number 2, This is the first time here in the spreadsheet that I've seen the annual dividend income over $4,000. So this is kind of the second milestone. My goal by the end of this year was to hit that 4,000. And I'd seen it over here. This is a good segue to Snowball. If we go over to the dividend calendar, you guys can see that. So for a while now, over on Snowball, it is shown over 4,000. And even on Blossom, it's shown that the annual income is over 4,000. But this is typically the most conservative number out of all of the different portfolio trackers that I use. So I always like to go by this one. Excuse me. And I don't know if it was this week or later last week. Definitely since our last live stream, I'm now at over $4,000 officially. So that was pretty cool to hit. I haven't really given much thought to the goals for 2026 for this upcoming year. But I don't know, off the top of my head, I think we could possibly hit 5,000. It's kind of a lofty goal, but I think we can do it. So I'm going to think a bit more about that. But anyway, going back over here to Snowball Analytics, Craig asked about the upcoming SCHD payment. And for those of you who don't already know, they're going to be paying on Monday, the 15th, which is going to be really exciting. And with the 496 shares that I had before the ex-dividend date, I should be getting just over $138 from SCHD, which is going to be nice. I mean, SCHD is always obviously the largest dividend payment of the quarter. It's definitely the largest dividend payer in the portfolio. But that'll be really cool. I mean, in total, guys, at this point, I'm projected to bring in $413 in dividends total, which is a new record. And it's also the first time, or I should say it will be a new record. And it will also be the first time I'll bring in over 4 in 1 month. So that's really cool. Always a good way to close out the year. And, it's just proof of something that I like to say from time to time, that dividend investing, or investing in general, but dividend investing is the gift that keeps on giving. It's one of those things that just gets better with time. And it's cool. I don't know. It's just cool to be at this point. You're not going to retire off $400 in a month, but man, this time a couple years ago, it was like less than 200. This time last year, it was probably less than 300. So progress is being made, and it feels good, my friends. Let me jump over to the chat real quick, and then we'll get into some of these questions. So let's see. Yeah, some of you guys think I can hit it. Some of you guys don't. Okay, fair enough. Striper Kid says, your portfolio will be sitting at 122K. Okay, I will take that. How strong is that ale? I'm only a few sips into it, so it's not really doing anything, but it actually is decently strong. I think it's about 8.5%. So it is on the heftier side. So I do have to pace myself. Let's see. Yeah, well, thank you guys. I appreciate all of the support. Yeah, Santa Claus rally will get you there. Love your portfolio reviews, but these young investors you review have to stop betting on a global apocalypse. Some are way too safe. Well, maybe. Who are you talking about specifically? I'm curious to know. Or what are you seeing specifically? Is it too many ETFs? What is it? Okay, guys. Let's jump over here. So we answered Craig's question. That's one. So just some context real quick. So this stock, Weyerhaeuser, that Holton's talking about, and for those of you just now tuning in, Holton's my little brother. Our dad is gung ho about this stock right here. It's actually really interesting company. It's like a lumber and molding company, but I think they're technically categorized as a real estate investment trust because they own a ton of timberland, like millions and millions of acres of timberland. And they use that to create lumber products. So they own the timberland. Okay. Then they get the lumber, then they make products. But they also like develop the land around the land that they own. It seems like there's a lot going on, but all of that's to say our dad is really hyped up on Weyerhaeuser. And the ticker symbol is WY if you guys want to look at it. But yeah, it's kind of funny. He's been texting us about it these last few days. Zulian, you moved up $1,400 of annual dividend income from last year. Should be close to 500. So I think I've added, this is a good question. I think I've added about $1,000, just under $1,000 this year so far. I came into 2025 with a projected annual income of, I think 3,054 is the exact number. Um, so yeah, so we've added almost $1,000 this year. And I think if we've done it this year, we could do it next year as well, which is why I'm thinking, yeah, I think we could possibly hit $5,000 in 2026. So, um, yeah, and I'm sorry, guys. I know I've got some questions to get into. Yeah, so far these last couple of months, the dividends have definitely been increasing at a nice rate. I've really been trying to hit the contributions a bit harder. I've been investing a bit heavier than I usually do, so that's definitely made an impact. And also there were parts of this year, the stocks I was investing in really did not have high starting yields. Like Zoetis is a good example of that. Clear Secure doesn't have the highest yield. So I was buying some stocks like that that just were not high yielding. And so that moved the needle a bit slower. But these last couple of months, I've been adding more to stocks like Vici Properties or Watsco, which are going to have higher yields than both Clear Secure and Zoetis for sure. Yeah, Coop's asking about EPD. I do like EPD. I have a decent position in EPD. It's not one that I'm interested in buying right now, but yeah, I really like the company. I think it's been a good investment of mine. It's been a good long-term hold. Yeah, this is a good question here. Did your dad get you into investing, or did you get him into investing? He definitely got me into investing. And I've told this story before, so I apologize for those of you guys who've heard it before, but growing up when I was a kid, probably I don't remember exactly how old I was, like, maybe 11 or 12, somewhere in that range. But my parents had created custodial accounts for myself and my siblings. And from that point on, every holiday, whether it was like, Christmas or a birthday, and it's still like this to this day. And it's like everyone in the family too. Now it's like, since I've gotten married, now my wife gets this as well. But anytime there's a gift that needs to be given, it's always money for the Charles Schwab account. And that started when I was, probably 11 or 12 or somewhere in that range. I don't remember the exact year. And that account that was started for me is the same Charles Schwab account that I still invest in today, my taxable account. And so growing up, we'd always give my dad a hard time, just because being a kid, you don't really care about this investing stuff. Although I will say I am starting to see a shift in that, and I am starting to see investing, I think, become kind of a cool thing to do. I'm seeing a lot more younger people getting into it, which is fantastic. But when I was that age, I didn't care about it whatsoever. I couldn't care less about it. And so we'd always give my parents a hard time, and my dad would always say, he'd always say like, someday you'll be glad that you have this. Someday you're gonna thank us for starting this for you. And it didn't hit me till I was about 25 or 26. And yeah, when it hit me, it really hit me like a ton of bricks, and I'm very thankful for that. So, and with that said, like, I know how, for me, I know how important, like, once again, it didn't really, it was dormant in me for a long time, but then it eventually did hit me, and I did kind of wake up. And, in hindsight, I realized how important it was for me to have that exposure from a young age. And I don't think even though I started at what I think is a relatively young age, relatively speaking, it's monotonous, but, or redundant. But yeah, I think if I didn't have that exposure, I wouldn't have started even when I did. And so it was a good thing for me. And that's also like one of my motivations here on the channel and talking about this stuff, and the hopes that if I talk about it and share what I'm doing, it'll spark that interest in someone else as well, and kickstart someone on their investing journey. So, and it's cool to know, like, I get comments and emails sometimes saying that that's been the case, and that's always my favorite thing. So, yeah, nice bit of Tucka here says, best thing parents can do for their kids. My dad took some money I had in high school and invested it for me. I always thank him. Yeah, that's awesome. All right, guys, but enough dilly-dallying. Why don't we get into some stocks? So Mike wants us to look, and I know a few of you guys do. Mike and Striper want us to look at Home Depot, and Striper will look at Home Depot, then we'll take a look at Lowe's. because I know you were asking about that. So let's jump over here to jump back over to the screen. Let me hide that. We are going to jump over to Snapstock and go to Home Depot. And by the way, guys, you can use Snapstock for all of your stock analysis and research. There's a link to this in the description. I hope you check it out. So what's been going on with Home Depot? I haven't looked at this company for a while. Looks like Home Depot's had a tough year. They're down, 10% in the last year to date, down 5%. So pretty interesting. Looks like the free cash flow yield is still a bit lower than the 5-year average. And it looks like the price to free cash flow is a bit above the 5-year average. PE ratios a little bit above. So even though they are down in the last year, it doesn't look like there's really much of a discount compared to its, historical averages. But getting into some of the growth stats, I mean, Home Depot has been a very consistent grower from top to bottom. Pretty moderate growth, definitely consistent, but it's not like, out of this world. Yeah, bottom line looks like it's growing faster than the top line. Looks good. Free cash flow has been growing as well. So yeah, I like all of that. Net debt to free shape still 4, even though the debt has been going up. Free cash flow definitely is it's still manageable is what I'm trying to say. I don't mind this net debt to free cash flow. I will say, however, the interest coverage ratio declining could be a bit of a concern. Excuse me. In the trailing 12 months, it's still 8.5. Sorry, guys, that was gross. Might have heard the burp, but in the trailing 12 months, it's still 8.5, which is above the threshold where I like to see it. About 8 or so is the minimum I like to see for the interest coverage ratio. So we are a bit above that. Even though some of the valuation stats are not favorable compared to the historical averages, it does look like the dividend yield is a bit above the 5 and 10-year averages. So based on that, maybe a little bit undervalued. I don't know. Different ways to look at it for sure. And Home Depot has definitely been a solid dividend grower. Like these are classic dividend growth stats. 2.5% yield, double-digit growth rate. It does look like, no, actually, I was going to say it does look like the dividend growth has slowed down over these past few years, but not really, right? Like even in 2024, they still raised it 10%. Payout ratio has been increasing since 2021, going from low 40s to now the 60s. It's not the end of the world, but it is a trend you'll want to be mindful of. It looks like the free cash flow payout ratio is, pretty in line with the earnings payout ratio. So, I don't think that's bad. I don't remember Home Depot's dividend growth streak off the top of my head. I feel like it's been longer than the 15 years we see here. No, 16 years. So I guess that's pretty spot on. So that was Home Depot. I like Home Depot. The snap score is pretty decent, 6.49. Let's look at the counterpart though, which is Lowe's. And Lowe's is the one that I have in my portfolio. Interestingly, they have a lower snap score, 5.5 or 5.5 compared to basically 6.5. Yeah, Lowe's is down a little bit less in the past year, and it does look like the free cash flow yield is higher. The price to free cash flow is lower. The PE ratio is a bit lower than what we saw with Home Depot. So, based on some of the valuation metrics, it does look to be more attractively priced if we're making that apples to apples comparison. However, similarly to Home Depot, Lowe's does not seem to be priced at a discount compared to these relative valuation metrics. So compared to its historical averages, seems to be about average priced, I should say. Looking at these charts, so it's pretty interesting. There is still some growth. It looks like revenue growth over the past 5 years is seeing a negative CAGR. Over the past 10, we do still see positive growth, not as consistent, not as fast as we saw with Home Depot. Earnings per share is telling a very different story here, though. This earnings per share chart, I think, looks a lot better than what we saw with Home Depot. And earnings growth has been pretty solid. Free cash flow growth has been pretty solid as well, although it does seem to have kind of, there are periods where it kind of stagnates as we see here. But overall, I'm fine with that. With that, similar increase in net debt like we saw with Home Depot. Looks like in the trailing 12 months, Lowe's has a higher net debt to free cash flow. I don't like this as much, 6.25. And also the interest coverage is lower, 6.9. So, that's not entirely great. Although I will say in both cases, I haven't looked, but I think we can rest assured that this is all pretty much going to be, or most of it at least, is going to be long-term debt. So pretty interesting. Now, this is going to be a bit skewed. I don't know exactly why it's showing this so far, but yeah, this is going to be, the dividend stats are going to be a bit skewed. We can at least look at the payout ratios though. So Lowe's has a lower payout ratio, earnings payout ratio, and free cash flow payout ratio than Home Depot does. So it does have the advantage there. And also Lowe's is going to have the advantage in the dividend growth department as well. Has a lower starting yield, but the dividend growth rate is almost twice as much as what we saw with Lowe's, or with Home Depot, excuse me. And they have a 62-year dividend growth streak. Not that that really like is a deal breaker, but the fact that they are a dividend king, they do have that very extensive track record, I think is good. Definitely not bad. So I'm curious to know too. Obviously, I have Lowe's. Some of you guys have Home Depot, but I want to know if you had to pick one of these, and I think some of you guys have already dropped this in the chat. But let me know if you had to pick just one of these to own. Which one are you picking between Lowe's and Home Depot? Let me know what you'd pick. You can only pick one. Let me know in the chat. Yeah, Tom's got some good insight here. Home Depot also took on debt to cover a lot of acquisitions in 2024. That'll be why the debt ratios have gotten worse. Thank you for that. That's good. Darth, what's up, Darth? Good to see you, man. Own both Lowe's and Home Depot. Okay. Tom says, I don't own either, but I'd want to research Lowe's over Home Depot based on an initial scan of their fundamentals. Fast Eddie says, I worked at both of them. I liked Lowe's better. Okay, Sports Edit says Lowe's. Okay, so it seems like Lowe's is the winner. Okay. Ollie here says, I think buying more dividend stocks with overall market index tend to underperform with the market, although we are trading capital gain for more cash flow. What are your thoughts? Well, as far as trading capital gain for more cash flow, I think depends on the stocks you buy. I mean, I don't think that's true with all dividend paying stocks. This year, at least, Caterpillar is the first example that comes to mind. Fantastic dividend payer, and it's also performed very incredibly. Actually, while we're at it, Johnson & Johnson, a sleepy dividend king, is another company that comes to mind. Definitely not trading capital appreciation for cash flow. You're getting both this year. Obviously, what happens in the longer term is more important than just what happens in a year, but still. Yeah, I think I don't know that you can say that, one type of stock always, outperforms or underperforms another type of stock or an index. There are so many variables that play a role in performance, and timing actually, especially with these individual companies, is certainly one of those variables. So just depends. Okay, so back to this. Ty Guy says probably go with Lowe's. Striper Kid says sold Lowe's for a profit, but may get back in. Jeff says Lowe's. Caesar says Lowe's. Yeah Man says Home Depot. Joey says both are in some of the funds and ETFs, but he'd go with Home Depot. Okay. So let's go back over to Jay says something about ABM. Let's take a look year to date down. Okay. I'll add that one to the list, Jay. Actually, I don't really have any data for this. Let me show you when I pull up ABM. Let me show you what it pulls up. It's got nothing for me here. So I don't know what that's about, but it's not really giving me anything to look up. Okay, so let's go over here to this one right here. So Dirty RCS says I'm 15. Okay, we kind of brought this one up earlier. 15 at 13K invested in 3 years. I enlist in the Marine Corps. Should I buy dividend stocks or value stocks? I only have 4K in dividend stocks. All 4K is in United Health. Okay, so you have 4K in UNH and you have 9K in something else. What's the rest of your portfolio look like? I'm curious to know if you don't mind sharing. And also, again, I think this is a pretty tough question to answer because man, it's so tough when it comes to the labels on these stocks, and I'm guilty of this too because I say dividend stocks, but you know, stocks in companies just they don't sit in just one bucket and they're frozen in those buckets. Stocks can be more than one type of thing. You can have a dividend paying stock that's also a growth stock, but if it's at a discount or if it's, priced attractively, it's also a value stock. And also, at the end of the day, I don't remember who said this. I think it was Charlie Munger, but there's this quote that goes around that says like all investing is value investing. And really, when you think of what value investing is, it's buying something, on the down and out and then selling it at a higher price down the road, or buying something with the expectation that it will appreciate in value. And I mean, that's at the heart of value investing, but really when you think about it, that's all investing. That's what you're trying to do no matter what type of investor you are. So, yeah, I don't to be honest with you, I don't really know how to answer this question. Yeah, I'll be honest with you. I'm not quite sure how to answer this question. Generally speaking, though, I would just buy the companies. This is such a lame answer, but it's the only one I have. I would just buy the companies that you think are best. Don't worry about labels. Don't worry about labels. Just buy the ones that you think are going to give you the best returns and that are in alignment with your goals. And I would think about that first. What am I trying to do with my investments? What am I trying to do with my portfolio? What's the goal here? And then you know, choose your investments or build your strategy just based on that. So, oh, this is cool. Dalen says, I hope all is well. Good to see you, my friend. I'm 20. I just recently passed 63K invested. Good job. That's incredible. And I'm one share away from 1,100 shares of SHD. You are crushing it. That's awesome. Okay, so let's go back over here. This one comes from Dr. Tax PR. Recently made my final take on my portfolio and committed to just fund it. Okay. Adding nothing else. 40% SCHD, SCHG, SCHY, which is the international one, right? Yes. Okay. 10% realty income, 10% ADC, 10% main, 10% JEPI. Well, I mean, it sounds fine. Truth be told, I really don't know much of, I don't know anything about you or your situation or your timeline or what you're trying to do with this portfolio, but I mean, seems fine. I think if you are really trying to go for those dividends, you're definitely hitting the mark there. Yeah, I don't know. Truth be told, I don't really know that I have a serious opinion about this portfolio. I think it's fine. I think it'll do fine. I don't. It just depends. It just depends what you're trying to do. I don't know. I know that's once again, I know that's a lame answer, but I just don't know anything about you. Hmm. Kevin Burgess, what's up, Kevin? Great advice, my friend. Don't worry about labels. Select investments that help you reach your goals. I may steal this because it is spot on. I hope you do. I hope you do steal it. But that's something that I've really been thinking about a lot this year. I don't know why, but I've been noticing not just in myself, but I certainly in myself, but all around I've noticed, people saying things like growth stocks beat dividend stocks underperform growth stocks. You should buy value stocks. You should buy, this type of stock. You should be this type of investor. And, I don't know. I think as I've thought about that a bit more, it's just kind of, I don't know. The more I think about it, the more I realize, a stock can be all of the above. It can pay a dividend. It can be it could grow. I think you should want all of those things. I think you should want both of those things in your investments. You don't dividends are not imperative. For some people they are. But, I think generally speaking, you should only invest in things that you think are going to grow. So wouldn't that make you like a growth investor? Wouldn't that mean you're buying growth stocks? And if they just so happen to pay a dividend, they're also a dividend stock? or a dividend growth stock. So I don't know. I don't think these labels are very helpful. And I've said this already, but I'm guilty of labeling myself. I say dividend stocks. But I also say that with like an asterisk. Nowadays, I say it with an asterisk. And the asterisk says something like dividend stocks can also be growth stocks or something like that. And I call myself a dividend investor, but by that I mean I only invest in dividend paying stocks. But still, I say that knowing that I'm still trying to invest in growing companies. So I'm not foregoing growth, trying to at least, for dividends. And I think that that's where there's this big misconception. You're either growth or you're dividends. And if you're one, you can't really be the other, or you are emphasizing one and foregoing the other. I just don't think it works that way. So anyway, I'll stop because I'll talk in circles about that. Okay. So let's go back over here, guys. We've got a couple more questions. So this one's about Kenvue and Warner Brothers Discovery. So Kenvue and Kimberly Clark, is that officially going through? So let's go over tier 2 Seeking Alpha. So the first one is Kenvue and Kimberly Clark. The second one is Warner Brothers Discovery and being bought out by Netflix. But also, actually, Netflix is just buying, I believe, the streaming platform and those assets. I think that there's still, what is not included in that? There's something that's not included in this deal. Maybe it's like the TV network. Let me know in the chat if you guys know the specifics there. But I know that there's something that's being spun off into its own company from this. Okay, so let's check this out. This is probably what we want. Is there anything newer? So, okay. And it doesn't look like, okay, so did the acquisition, is it for sure? I think it probably is for sure. So assuming it's for sure, Kenvue buying Kimberly Clark, it doesn't really interest me that much. And actually, if we go over to Snapstock here, if we just pull up both companies, I mean, really neither of them are growing. I mean, Kenvue sales have pretty much flatlined. Their earnings have actually gone down since they spun off from J&J. So I'm not super impressed with Kenvue. Kimberly Clark, pretty similar story. The top line has not budged at all this last decade. We see a little bit more growth on the bottom line in the free cash flow. So at least there's that. But I look at this deal and I see one company buying, one non-growing company buying another company that's also not growing. And I would be hard-pressed to believe that the merger of those two will somehow result in growth of the combined company. So, like I said, I'm not that excited about this acquisition. I don't remember exactly what they paid for it, but I don't know, billions and billions. So let me see here if there's some chatter about Netflix. Okay, so okay, so Joe's here says it's not buying the television aspect. Okay, that's what I thought. It's buying the streaming and in the production. Okay. So I actually, and I think that it was something like $87 billion is what they're buying it for. Right? It was something like that. And neither of these pay a dividend. So I really don't, I'm not super invested in it, but it is interesting. What is the number? Let me pull it up here. I think it's $87 billion, if I'm remembering correctly. but I want to get this right. So is there still, it looks like maybe they're still bidding? So Paramount, okay, so Paramount also put in a bid for 110 billion or almost 110 billion, but this also included the television stuff as well. So this included the whole kit and caboodle. Netflix, as we established, just the streaming studios and HBO, I think it was 87 billion. I'm going to go with that. So I actually don't mind it. There's a couple reasons why. I don't know exactly about the price and how much they're paying for it, but the deal itself, I kind of like. Number one, I think it's going to take away a streaming competitor for Netflix. So I think that's a good thing. Also, the assets that they're buying, you've got Harry Potter, you've got there's another one in there that's pretty big. I don't remember off the top of my head. Harry Potter is a big one though, and obviously everything on HBO. Think Sopranos, Entourage, love Entourage, Game of Thrones. So there's a ton of great assets with HBO. You know, once again, it takes a competitor off the table. There's probably some consolidation needed in this space as well. But also those media assets are probably just going to be exclusive to Netflix. They're not going to be, shared with any of the competitors. And so that's also a good thing for Netflix. I think more content is going to draw more potential customers. But even so, for current customers, they're getting more content without having to pay more for their subscription. Maybe they will end up, Netflix will raise the price. I think this does give them a bit more pricing power as well, because they do have all this, they will have all this extra great content. Friends, I think that was another one that I was thinking of, the show Friends. Sorry, I'm looking at the chat now. Ellison's and Skydance. Okay. So what was I saying though? I think it also gives Netflix a little bit of pricing power to raise the prices if they want to. And even if they do, because right now I'm sure there's a ton of customers who pay for both HBO and Netflix. And even if they raise the prices a little bit on Netflix, well, they'll still come out better in the end, because they'll still end up paying less probably than if they had the two separate streaming services and had to pay for them both separately. Sorry about that. Yes, DC, there you go. So you got Batman, all that stuff, Superman, yeah, Wonder Woman, there you go. Oh, interesting. So yeah, no one's talking about the live streaming, but HBO also has live streaming technology and contracts. Yeah. So I think it's interesting. Probably good for Netflix. It's so interesting. There's over these past few years, but there's been so much movement, specifically with Warner Brothers, right? Because it spun out of AT&T to form Warner Brothers Discovery. Now it's being picked up by Netflix. I think it was something too before, or somewhere else before. Well, I guess Time Warner. So never mind. 82 billion. Okay, I was close. So yeah, I think it's good. I don't have an opinion about the price because I just don't know enough about it to have a price. I know there are some concerns about antitrust, maybe, and like anti-competitive practices or whatever. But I don't know. Like, I guess it depends, like, who you would consider to be the competitors of Netflix. Is it just other streaming services? Is it other content platforms? Like, could TV and cable still be a competitor to Netflix? YouTube, I think YouTube is undeniably a competitor to Netflix. Actually, they have their own TV service now too. So, I don't know. I'd be surprised if this one got shot down. But anyway, enough rambling on that. This is a great question. I'm going to save this one because I think it'd be worth bringing up in a future newsletter. So Jack wants to know, at what point does a dividend yield become suspiciously high? So, and let me know if you guys have an answer to this as well in the chat. I want to know. But I don't know that there is a particular number. I really think it's company specific. I think so. Let me think about this for just a moment, because the reason that it would become suspiciously high is, before I even get to that, I will say, obviously, there are some stocks out there that have high yields by design. If you look at some REITs, if you look at some business development companies, if you look at covered call ETFs, those are naturally going to come with higher dividend yields, and that's not really suspicious. That just kind of is the nature of those. Excuse me. But other companies, like, the only other reason a stock might have a high yield, excuse me, my goodness, guys, is because the share price had come down. And so it can become suspiciously high if you're noticing a big jump in yield, the share price is going down, and there is a concerning reason that the share price has gone down. I think that really matters more than just the yield. I think the yield itself doesn't really tell you much. I think possibly the trajectory of the yield could tell you something. It could give you a clue, but you also need to look under the hood and find out why has the yield shot up? Why has the dividend yield gone down? And I would let the answer to that question guide you. Additionally, I was going to bring this up too. Kevin said, I think when the payout ratio, although I like the kids about ratio better, but when the payout ratio gets out of control, that is also a good indicator. Yes, I agree. So yeah, when the payout ratio gets too out of whack, that's also definitely concerning. And possibly too, like, let's think about why might a payout ratio get too out of whack? Well, if a company, historically has a certain payout ratio, then it starts shooting up. That's either because, they're raising the dividend. Well, it's because they're raising the dividend faster than the earnings per share or the free cash flow per share, if they're even raising the dividend, or the earnings per share is declining, and that's pushing the payout ratio up. If we go back over to Snapstock, let's look at UPS as an example. This is one that I've been a bit concerned about for a while now. And we see this happening with UPS. The payout ratio just continues to go up and up and up, okay, to the point where it's now over 100%. And a lot of that is because we see the earnings going down. We see the free cash flow going down as well. And so that's another concerning thing. If you see the payout ratio going up, look and see, what's happening with the earnings, what's happening with the free cash flow. If those things are going down, that's not a good sign. And if those things are going down, you'll likely see the share price going down as well. If we zoom out over the last 5 years, what's happened with UPS is earnings and free cash flow have declined. So has the share price. It's down 28% over the last 5 years. Now, with that, what's happened? The dividend yield has shot up. The 5-year average yield is 3.3%. The 10-year average yield is not much lower than that. The dividend yield right now is coming in at 6.5%. Just looking at this yield on its own is not going to tell you anything. The trajectory tells you maybe you need to look deeper, and upon doing so, you'll see a few red flags, obviously, with this company. So that's kind of how you should approach it. That's a little bit of detective work that needs to happen. And hopefully that makes sense. Hopefully this was a good illustrative example. Yeah, Joss said the same thing. I like to look at the payout ratio instead. If cash flows can't sustain dividends, it becomes scary. Look at UPS. There you go. Great question, though. Okay, Law says he's got a fun question. What's your take or the chat's take, you guys as well, on investing in a taxable account and using dividend strategy as supplemental income with the potential to one day be your main source of income? Well, I think this is something we're all working toward, right? As investors who, assuming that this is all of us, I'm assuming it is since you're here. Maybe it's not. But I would think that the great majority of us are doing something like this. We're investing in dividend paying stocks with the hope that, someday down the road, that passive income will be able to be our main source of income. That's what we'll use to pay our bills. I think that's really the end goal with all of this. And when thinking about financial freedom, you reach financial freedom at the point where your investments cover all of your expenses. It doesn't 100% have to come from dividends, but I think ideally for a lot of us, we'd like to have dividends cover 100% of our bills. Um, Now, personally speaking, with that said, I don't know that I will wait to start pulling my dividends until like all of my expenses are covered 100%. I've talked about this before, and so I apologize if you've heard me say this, but I could see myself maybe starting to pull some dividends when I've reached a point in the portfolio where I'm averaging about $2,000 per month. Maybe I'll start pulling a few $100 or $500 or something every single month, using that to pay some of the bills and then reinvesting the rest, and kind of start getting used to using dividends. Because I would imagine, I don't know this for sure. Let me know in the chat if you are retired and you've experienced this. I would imagine once you get to that point, it's probably hard to talk yourself into actually using your dividends and pulling them from your portfolio, because you never want to disrupt the compounding process, right? You want to keep reinvesting dividends as long as you can, because that's only going to help further grow the portfolio and further increase your income. And so I would imagine it could be a bit difficult to allow yourself to start pulling some of those dividends. So I would like to kind of train myself to start doing it and ease into it a little bit. So that's kind of why I'm thinking maybe once I reach around $2,000 per month on average, I'll start pulling some of that income, using a little bit of it. We'll see how it changes over time, though. Yeah, Jack, FDP. We looked at this one somewhat recently. I don't remember. I don't remember much about it, but yeah, let's check it out real quick, and then we'll see if there's any last comments, and we'll call it a stream. So, FDP Fresh Del Monte had a pretty solid year, up 15%. It doesn't look like there's much data going on here. I don't know exactly why. 2.6% yield. Very nice dividend growth rates. Yeah, I don't know. I've been seeing this with a few stocks where it's not loading some of the data. So we definitely need to look into this. Apologize for that. Remind me next week to revisit this one. I'm hoping it'll be fixed by then. I don't know exactly what, but I've noticed with some of these, I've noticed with some of these like smaller companies. What's the market cap on this one? I've been noticing with some of these. Okay, so it's less than 2 billion. Some of these smaller companies, it's not loading some of the data. Yeah, okay. So Hunting Dividends wants to look at Clorox. We can do that. We can do that. It's been a while since we've checked out Clorox. So let's jump back over here. Yeah, so Snap score is not great. Not great. From what I remember before I even scroll down, I know they had a pretty good run during the pandemic. And I think they've kind of suffered since then. But low growth, low margins, decent debt, solid dividends. Pretty tough year for Clorox, down 34%. Low valuation. So PE ratios quite a bit lower than the 5-year average, as we can see here. Price to free cash flow is a bit lower as well at 20. Free cash flow yield's looking good at about 5%. Okay, so that's looking good. Yeah, so after kind of the pandemic years, we see sales kind of start to pull back a little bit. But, for consumer staples, I think this is a pretty expected, revenue growth chart, slow and steady for the most part. Earnings per share and free cash flow per share really took a hit, 2021 and beyond. Looks like they've since recovered in the trailing 12 months. We'll see what happens moving forward, but that's definitely a red flag. Debt doesn't look to be in bad shape. They are increasing the net debt over the years, not all too surprising. Net debt to free cash flow in the trailing 12 months is 4.6. Prior to that, 5.6. Not the end of the world. Interest coverage ratio, 11.2. So I think that's fine. Yeah, I don't know why it's doing that either. Okay, so Clorox. What's the actual dividend stats? I think Clorox is a dividend king, right? Almost a dividend king. High yield, about 5%, 2.5% 5-year growth rates. So yeah, low, near 50 years of growth. Relatively high payout ratio. So, that's a bit interesting. I think that kind of is an issue for me as well. Yeah, so I would say in this space, there are other companies I'd sooner look at. I'd sooner look at Church& and Dwight. I'd sooner look at Procter& and Gamble. I'd sooner look at Colgate-Palmolive. I like any of those companies better than I'm liking this one. Okay, guys, so we'll go couple more questions. Okay, this is a quick one. Do you have a 401k or just the brokerage in Roth? Yes, so just the brokerage and the Roth IRA. No 401k for me. Just the two accounts. Excuse me. Ticklish Elephant. I like that name. Do you have any thoughts on interest rates coming down and affecting BDCs like Maine, Ares Capital, or Blue Owl Capital? Yeah, I think business development companies had a really good run these past few years as interest rates had gone up. It was only a matter of time before interest rates started coming down again. So, ebbs and flows, the market moves in cycles, and good times, bad times. I don't really have too much of a thought, too much of an opinion about it beyond that. I'm personally continuing to hold my business development companies. I have Maine, I have Blue Owl Capital Corporation. I feel fine about Maine as far as the dividend safety goes. The dividends still seems very well covered. They're still paying out their supplemental dividend, 30 cents. So that's good. Blue Owl, I am a bit more concerned about as far as the dividend goes. They have hinted that they will possibly reduce the dividend in 2026. By how much, I'm not exactly sure. It is still covered by the investment income, by all their income. So it's not like the end of the world. The company's still doing fine. Excuse me. And if they were to cut their dividend, it wouldn't be because any serious weakness in their portfolio. It really just is interest rates and the interest rate on their loans that they issue coming down as a result, because the great majority of them are floating rate loans. They go up and down with interest rates. So I will say I'm a bit concerned about Blue Owl's dividend safety. Still an incredibly high yield, and this is why one of the reasons I don't make it a huge position in my portfolio. I think it's 2% of the portfolio. It's how much of the income of the taxable account is it? I don't think it's a whole lot. So Blue Owl guys, actually, yeah, it's about 9% of my taxable account. Taxable account's income. So a decent chunk of change. So I might be taking a little bit of hit in dividend income from that, but once again, I'm okay with it. I and other Blue Owl shareholders have been handsomely rewarded these past couple of years with all of the supplemental dividends they paid out. So once again, good times, bad times. And yeah, I'll just leave it there. Well, guys, yeah, well said. Answer to the ultimate question of life, the universe, and everything. Good times, bad times. I've had my share. Who sings it, guys? Let me know. You don't let me down in the chat. Don't let me down. You know it. There you go. Fast Eddie with a fast answer. But yeah, guys, I think this is going to be a good place to wrap it up. Before we sign off for the night, I do have one final question for you. I know it's Friday night. I know the market just closed, earlier today. We've got a long weekend ahead of us until the market opens back up. But I want to know, what are you planning on buying next week? Do you have anything in your sights? What are you looking at? What's looking good for next week? Let me know in the chat here. In the meantime, I want to see Tom's comment here. I'm fine to hold Blue Owl. They're the second largest BDC. Yeah. Yes, they cut the special dividend and others might be cut, but it's solid. Yeah, exactly. Exactly. Charles is going to pick up some SCHD. Sir Dude Broman. Mr. Broadcom. Love it. Love it. Wilkie's going to pick up some CF. Which one is that? I know that ticker, but the company's escaping me. CF Industries. Okay, I think we've looked at that one before. Yeah, Artlessly White. Nice. Nibbling Vici Rexford in Amazon. There you go. Creative Destruction, a little bit of the S&P and Tesla. Nice. Chris with a little shopping spree as per usual. Walmart, Meta, Nvidia, CDNS, and Google. There you go. Vasco looking to pick up some Otis in ADP. I always think of PPCE and whenever I see Otis. He's the only other person who I've heard talk about that company. ADP is a good pickup right now too, by the way. Good job. I'm surprised none of you guys asked about ADP tonight. I think we looked at it a couple weeks ago. Maybe that's why. Law's going with SCHD and VOO. Good pick. Yeah, Joss is going with Visa. Quincy, a little Procter & Gamble. Fast Eddie, some Palantir. Striper Kid, FSELX, a mutual fund. Jeff's going with DGRW, SCHD, SCHG. Nice. Yeah, man, with some SPY. Adams rotating into dividends from growth. There you go. Alex picking up Coca-Cola. Nice, nice, nice. Coop, GRNJ. It's a small cap ETF. It's Tom Lee's. Okay. I'll tell you what, I know nothing about Tom Lee. I've heard the name. I know what he looks like. I've seen him on thumbnails. I have no idea who the guy is, but I feel like he came out of nowhere. And now he's like, everyone talks about Tom Lee. Why is that? What is it about this guy? He's everywhere. Anders, same old Realty Income and Mid-America. Yeah, Wilkie may look into ALSN. Nice. Craig used to work at Otis. Cool. Yeah, there you go. My startup position in Badger Meter. Great pick. Great pick. Sean going with Maine. CDM's going with Pepsi. Yeah, Adam with some nice picks here as well. There you go. It's his hair. Okay. Yeah, I just, like I said, I feel like this guy just came out of nowhere and now he's everywhere. I'm sure he's been around. It's probably just me living under a rock, but yeah, Joey, I'm going to save this question too. I don't know off the top of my head. I don't know yet. I haven't really given it much thought, but could be a good video or newsletter topic. So I'll save that. Let's see, a little MasterCard, little Chevron and EPD, some more PayPal. Nice, nice. Okay. Well, good stuff. Little Vail. Nice. Okay. Well, guys, thank you so much for hanging out with me this last hour and 10 minutes. It's fun to be back with a live stream after a week off. We'll definitely live stream next week. That'll be the 19th. And then I would imagine the week after next, guys, probably not, just because of the holidays and stuff. But yeah, we'll be back. We'll definitely be back next week for a live stream. This weekend, I've got a video coming out tomorrow. Really good video. I hope you guys check it out. It took me a long time to edit today. It's a whopper too, almost 20 minutes. So definitely check that out. It's going out first thing tomorrow morning. A couple other last notes for you guys. I'm going to be doing a video with Russ coming out on, I think, Tuesday or Wednesday. So thank you guys who submitted questions for that. I also have a video coming out sometime soon with Professor G. Last month, we did a Q&A video together. We're going to be doing another one. We're recording that on Sunday. And so we're recording that Monday, excuse me. And so that'll be coming out soon. Check that out. Last thing for you guys. I promise this is the last thing. If you guys are on Instagram and are not following me on Instagram, please shoot me a follow. My Instagram handle is just @retirewithryan. I'm really making an effort to grow on Instagram. One of my goals for 2026 is to do more on that platform, and I'd love to see you guys over there. I'm posting just a ton of other stuff that you would definitely not see here on YouTube. A lot of stories. I'm very active in the stories over there, so I'd love to have you guys follow me on Instagram. I will drop my handle here in the chat. at Retire with Ryan. I'll put it up on the screen. Shoot me a follow over there. I'm at, what are we at? 1,171. So let's see if we can get to 1,200. Let's see if we can get to 1,200 tonight. Ooh, someone just followed. Thank you. Yes, Joey, deep end tomorrow. We're going to be not tuning. We're going to be joined by a special guest, BD Investing, Bilal. Great dude. He's over on Blossom. Big guy on Blossom. Big guy on Instagram and TikTok too. So that'll be a fun conversation. It's always fun to have guests on. But yes, we'll be going. Actually, we'll be going live at 9 a.m. Pacific time, noon Eastern time. If you want the link to that live stream, go over to my channel, go to the posts or the community tab, scroll a couple posts down. I posted about it yesterday, and you'll find the link to our stream there. Would love to have you guys join in that conversation tomorrow at 9 a.m., 12 Pacific time, and just drop whatever questions. We'll go through them live. So yeah, guys, have a great night. Have a great weekend. Stay out of trouble, and I'll see you in the next one.